All right, Matt, we are officially live. Thanks for hopping on the show today. I'm excited to dive in with you.
Thanks, Mike. Yeah, really great to be here. Thanks for having me.
Yeah, I think one interesting and appropriate kickoff point would be your foray in the African banking system, particularly in Nairobi in Kenya. How did the opportunity to move to Kenya and work for Barclays come across your plate?
Yeah, so for context, lived and worked in Nairobi, Kenya. I was head of mobile and internet banking initiatives for Barclays Bank Kenya before I started Remitly. And my journey there, I had traveled and done some volunteer work and other things in East Africa specifically, starting in college. I was always drawn to international experiences, even though I'm, a kid from Boise, Idaho, fifth generation Idahoan. I've traveled close to 100 countries. Lived and worked on 3 continents. So in business school, I wanted to join a general management program, and I wanted that general management program to have an international component to it. And I remember meeting with my then professor, now about to retire dean of Harvard Business School, Nitin Noria, and I was debating a few job opportunities, one of them at Barclays in their corporate and retail bank. And he said, it's great if you want to join Barclays. It's great if you want to do a international experience, but make sure to have the conviction to in a year or two, because I would spend a little time in London first with Barclays, to actually go to Africa and East Africa, which is why you're actually joining Barclays. And I thought back to that advice frequently because it very much was the road less traveled. Like, it was not the typical career decision when you're at the mothership of Barclays at One Churchill Place in London to decide to then go to Nairobi and take that job in digital channels. But I'm super grateful for Nitin's advice, super grateful that I took the road less traveled, because it ultimately gave me the idea for this business. And here we are today.
Yeah. It's funny you say that. I had a similar experience after I went to engineering school at UConn, and after there was these senior design projects where you had to choose a senior design project, and you're basically spending an entire year doing this one project. And I was late to this class, and so everyone had already picked, and I was stuck with this project based in Singapore, redesigning this massage chair that Brookstone made. It's like one of these super high-end chairs, and it went really well, and they ended up hiring me. So I moved to Singapore, and that just turned into an awesome experience of traveling the world. So I very much resonate with your advice, particularly to people in their 20s, younger in your career, to just do. Ideally, physically, you're in a new place, but even just intellectually exploring something that's just uncharted territory, kind of following that instinct is why not do it? That's the time to dive and have that adventure. So yeah, totally. So you're sitting in the Nairobi office, and is the story that you see how difficult it is for people who are moving between African countries to send money back and forth, or is there? I'm curious, what was that spark to start the company?
Yeah, absolutely. So because I was an employee with Barclays, I was getting paid in British pounds. I was living in Kenyan shillings. I eventually had to get money back to US dollars. And that was all the things you'd imagine. It was inconvenient, expensive, not transparent. And so that started getting me thinking around it. And then a couple other things happened. One, M-Pesa was transforming domestic financial services. And that's a mobile wallet that is one of the most successful mobile wallets on the planet. And we can talk about how financial services, I think, really varies depending on the country. That was an important lesson. But in Kenya specifically, M-Pesa was taking off. And then, quite frankly, a lot of my Kenyan friends, it was a pain point for me, it was a much bigger pain point and a much more important problem that they had to receive money from their loved ones in North America and Europe. And the examples of how I saw people receiving money, like I saw one of my friends use her sister's Bank of America debit card. And I just thought there had to be a better way. And there had to be a better way to improve payments internationally, but with an initial focus on what are broadly defined by the World Bank as remittances to low and middle income countries where that money goes incredibly far. And it seemed like the right time with M-Pesa and mobile wallets to actually solve that problem.
Yeah. I always love this question, which is how did you go from, you have this idea conceptually, you understand it, presumably you've dived deeper into the nuts and bolts of how money is moving between countries, and then you fire up the software team, either a friend of yours or contracted freelancers, and you're building a prototype. Is there a clear path in your mind at that point to what the product would do and look like, and has that changed much over the years?
Definitely, especially the early days, there were some pivots. And before I talk about the pivots, I think there's a really important principle that I think about a lot, and that is it's super important to fall in love with a problem that an entrepreneur wants to solve, not the solution. The solution will pivot, will vary, and I think for seasoned entrepreneurs, that's an obvious piece of advice. But I think it's super important. And it was taught to me by a Techstars mentor back in 2011. And so the problem I wanted to solve was that sending money internationally, especially to low and middle income countries, was inconvenient, not transparent, and there had to be a better way with digital devices specifically. And so at first I was like, wow, all of the infrastructure of becoming a money transmitter, all of these other things, I was like, let's just create the Kayak, the search engine for remittances. Pre-product, which I think is another super important thing as an entrepreneur, is to find the leanest way to test hypotheses that are embedded into the potential solution. We didn't even start building product. I spent a bunch of time figuring out why isn't there a company out there that at a large scale is reinventing this industry like Kayak had done it for airlines. And it turns out there's a bunch of issues with that business model. There's a lot more complexities in remittances. It's much broader than just price, unlike airlines, et cetera. So then I pivoted to say, okay, let's go all in and become a money transmitter. Once we did that, again, coming from Kenya, I was like, all right, the vision and pitch is let's send money from a mobile wallet or from a mobile phone to a mobile wallet around the globe, because everywhere is going to be like Kenya with M-Pesa transforming financial services. Also an incorrect hypothesis, because it turns out that mobile wallets are huge in certain countries, Kenya, Bangladesh, we could go through a list. But also in a lot of countries, people want to receive cash. They want to receive bank deposit. So we pivoted again from this mobile phone to mobile wallet, which was our Techstars pitch. That was our Techstars pitch. We had raised seed capital on it. But I think especially early stage investors trust that an entrepreneur will pivot in an efficient way around the right solution that customers actually want. And in our first market, the Philippines, customers did not want to send money to a mobile wallet. They wanted a range of cash pickup locations, bank deposit, door-to-door delivery. We widened our disbursement options. And there still is a mobile-to-mobile element, but it's not a mobile wallet specifically. We pivoted away from that. So those are just a couple of the early pivots. And I think we're lucky to have made them quick enough in those early days before we ran out of time, energy, money, because I think that's how most startups eventually fail.
Yeah, I'm curious on the slight tangent, but how are things today in terms of the preference of cash, like physical tender, in the hands of people either in Africa or Southeast Asia versus Europe and the U.S.? I imagine the general trend is declining, but is there a strong foothold of cash preference in these places still?
Yeah, definitely. Again, it varies significantly by country, so it's hard to answer that at a global aggregate level because it varies so much by country. And so, but I have been surprised where we have 8, 9, 10 years of data of percentage of bank deposit versus cash pickup in some select markets, how sticky cash has been. And I think it's easy to without deep understanding of customers in certain markets like Mexico or Latin America or the Philippines, et cetera, it's easy for us to sit here and say, oh, cash is horrible. Cash is a crucial part of a lot of economies around the globe. Will it be that way forever? Probably not. But the timeline, if I were to have guessed 10 years ago versus now, of how fast it has shifted, has been slower, even through a pandemic. So cash is important, but it's also, we shared a stat a couple of years ago, 2-3 years ago in an article. And I don't know if it's exactly, you should go back and look at that article, but it was 40 to 50%, I think is what we shared is cash pickup. It was cash pickup at the time. And So it's also, again, a wide range. It's bank deposit, it's mobile wallets. If you're sending money to Kenya, it's door-to-door delivery. It's all of these different options. And we can send money now to billions of bank accounts, hundreds of millions of mobile wallets, hundreds of thousands of cash pickup locations. And that's what we're good at, is dispersing funds the way customers want to receive them. And the big takeaway there is cash is popular in some markets, but it really varies on the market. And you need to be able to get money in the hands of customers the way they want to receive it.
Yeah. Yeah, it's fascinating. I understand the slow trend to transition away from cash. I would imagine that's largely stemmed from the inconvenience of having digital alternatives that are just not hitting network effects in certain areas, either connectivity issues or just old cell phones that aren't. I have a friend of mine who runs a startup actually invested by Techstars as well in Tanzania. And he's building, it's like a marketplace for farmers, people who are farming maize and they want to sell it and, have a more efficient network there. And he tells me that there's just incredible friction of people adopting it because of when they get a phone, it's stocked with Facebook and it might have a browser on there, but it's not high speed internet, iPhone 11 like we're used to. And so you're just like, you're fighting, you're lifting people into the digital communication age. It's not as if they're just downloading their 55th app onto their iPhone. So yeah, it's understandable for sure. Fast forward to today, you guys have certainly hit scale. You put in a lot of time on this, 11 years working on this business. You're now, I believe, at around a couple billion in valuation, over 1,000, somewhere in that range, employees. Do you sit around and reflect on the journey and think about what the global impacts have been from the seed that you planted years ago? Obviously, one person can only do so much, but one of the things that gets me excited about entrepreneurship and founding companies is it's like planting a seed. If it grows and you water it and you tend to it with all of your attention, it can actually turn into a forest. Yeah, I'm curious what your reaction is to that.
Yeah, definitely. I think that the entrepreneur in me, honestly, probably spends more time looking ahead at like what we can and should do. But it's super important also to reflect on where we've been and how far we've come. And I like your seed analogy because this is true of every entrepreneur's journey. If there's folks, on the entrepreneurial journey listening to this call, it's not like that seed that you planted, like as a forest. You just wake up one day and it's a forest. It's not binary, right? It's gradual over 10 years for us, right? And I think that it's this mix that I'm super excited about right now and confidence in what we've done that gives us this unique platform and scale and size to really reinvent how first payments are done internationally, specifically for immigrants, and then expanding that to a wider range of financial services for immigrants and their families. And so, as you can tell, even my answer, like I'm talking about the future and what is possible, but we have this platform now that I think makes it possible. And I know how hard, and it's probably for folks listening to this, it's a journey and it's iterative and it takes grit and perseverance. I think something that is often under talked about with entrepreneurs, like because you see the headlines and the results. But every entrepreneur, if they don't say there's been like hard times that have taken extreme grit and perseverance, then they're not being honest. So I think that it's a mix. It definitely, looking back, gives me a lot of pride and confidence for what's to come.
Yeah. Do you find that, as this is in my personal experience in growing companies, that it sometimes feels the product moves slower as the company grows bigger? And this is due, especially when you're dealing with international, complex, regulatory, secure product-related issues. You have, when you're small, you iterate with a few people and you're not concerned for, you're concerned for testing is just manual testing and QA. As companies grow and scale, they have all sorts of scaling challenges and regulatory concerns. How do you think about it? Is that even an issue internally, or do you find the engineers and product team just kind of march along?
Yeah, it's a really
at their own
interesting question.
cadence?
I think that, maybe it's the strategy that we pursued. Like we only focused on U.S. to the Philippines, really Washington State to the Philippines for the first about 2 years of the life of the business. That's it, just U.S. to the Philippines. Then we added Mexico, then we added India, then we added Mexico. We're talking like 4 or 5 years into the life of the business. And I think that the reason we did that is as a regulated money transmitter and as a company that really was focusing on the long term, it was very counterintuitive. Like one would think focus on the long term, go really broad, like faster. And we actually grew way, way slower in those early days because of that. We didn't get some of the nice SEO organic growth like some of our peers did, but we drew inspiration from Amazon and Bezos. We're headquartered in Seattle. He's an early investor. And not only did Amazon invest in e-commerce to start, but they invested in books in a very customer-centric way and being the best bookseller and trying to get some of that friction out of the system for one specific vertical and then expanding from a stronger base. And so fast forward to today, I think maybe because we got a lot of that foundational stuff done, and it's a journey, right? Like we have so many more foundations to build, but I think that mentality combined with now our scale and size to where we haven't been around for 150 years like some of our competitors, we've been around for 10, but we have enough scale to be able to say, let's go much, much deeper into building out a payment network in Mexico. I just, random example, pick your country. When you're 5 folks, and tiny and trying to find product market fit, you just don't have the resources. When I talk about the flywheel effect or the benefits we have at our scale and size, we now have enough resources to truly reinvent payment rails across the globe so that you can receive money in minutes in a wide range of ways and with complete peace of mind, because there's so much friction in that, which I can talk about later if it's helpful. And so anyway, long-winded way of saying, I think we should have a healthy paranoia that we're not slowing down and that we're not becoming too big company. But we also now are in the sweet spot where we have enough scale where we can invest more and ultimately a lot of infrastructure that we need to build to reinvent payment rails across the globe to help customers get money home more reliably and faster.
Yeah. Really interesting to hear the insight taken from Bezos and the early investment. One of the things that stuck with me, it's funny, I actually just watched a little snippet from him this morning. It's some older conference he was at, but he was talking about long-term vision. And he said that somebody came up to him at this conference and said, "Congrats, Jeff, on the recent quarterly earnings." And he said, "Yeah, thank you. But that was already set in stone a year ago. 3-4 years ago, we were thinking about today." And, he's thinking 3 to 5 years ahead. And probably further conceptually, but really practically 3 to 5. The second thing that stuck with me that he said was in conference rooms in the executive board, they would have a table or a chair rather that would be empty, designated for the customer to really cement the physical representation of what the customer would say in this setting. And it sounds almost silly, to do that because it's just, what are we kidding? It's just a chair there. But it does emphasize the importance of the absence of the customer's voice in conversations and how, I've seen this where execs can have a vision for the future and you can clearly articulate it to investors and you get them excited and you're building, and it's not what people want. There's no one that actually wants this shiny thing that you're building. So you're keeping it super practical, and Amazon, I think, is the exemplar of this, is a really humble reminder for founders because you want to build that shiny, beautiful thing. And this kind of loops back to what you're saying earlier. When you're fixated on the solution, I think that when you're obsessed about this particular solution and building that, you're liable to kind of drift off and not think about, okay, this is the frustration. Let's understand deeply the psychological mechanics that are making this person have to do this roundabout way of solving this problem. So yeah, I should get a tattoo of that someday.
Totally.
How important it is. What was your run-in with him? Did you guys bump into each other at a conference? Did you cold email Bezos? Was it Bezos in particular, or more of the folks in the investment team of his foundation?
It was a combination of my co-founder and CEO of a company called Shelfari that he sold to Amazon probably getting close to 15 years ago. So he he was at Amazon after he had sold his company to Amazon and got to know Jeff via that acquisition. And then separately, via the Techstars network in Seattle, met his investment office. And so it was multiple touch points, but we've been lucky to have a lot of really high caliber, both angel and institutional investors. And just being in Seattle, the number of folks that have a lot of operational expertise and rigor reinventing e-commerce that can be applied to remittances has been great. So definitely a lot of lessons learned, both directly from Jeff and from just being in Seattle and having the Amazon ecosystem here.
Yeah. Cool. I just moved to Portland, Oregon, so I'm awesome. Not far away. Cool. Yeah, I dig it. I wanted to ask you, technically, what is going on now underneath the hood at Remitly? When I'm sending a transfer from Washington to Philippines or any combination of countries, are you keeping a central ledger and you're effectively moving money between banks and you're allowing that instantaneous transfer, but you're taking the lag time on the back end, or am I completely wrong? Is there some other method for maintaining
There's a variety of ways to answer your question in terms of what's happening on the back end, but the macro thing I'll start with is there's a lot of infrastructure that has to be built to enable, fast remittances and remittances that really build peace of mind with customers. So we might drill into our disbursement network. And what we do there is we go, sometimes we'll use what are called aggregators, where you can plug into one partner and they'll connect you with several. But with our scale and size, as I mentioned, we can go to the last mile. So what's happening on the back end there is we're doing direct integrations, or they're increasingly doing direct integrations with our API. And we have direct commercial agreements such that we can disperse funds instantly in a wide range of options. That's our disbursement network. Same analogy kind of exists with payment acceptance and how we collect funds, whether it's bank account or debit card, a wide range of payment collection options. The risk systems in terms of what's happening on the back end are complex, both compliance, which means identity verification or KYC, know your customer. It's complex when it comes to fraud prevention. And by fraud prevention, I mean when there are stolen identities out there. There are a lot of fraud vectors, but basically trying to cash out stolen identities on a money transmitter's platform is one way that fraudsters try to liquidate large-scale stolen identities. And so being able to delineate between good and bad good customers and bad actors like fraudsters in a way that doesn't deteriorate the customer experience takes a lot of analytics, machine learning. Again, our scale and size helps us with that. Treasury, you were kind of alluding to when you talked about that. And even if we have direct integrations with the partners, how we're doing our flow of funds and cash management varies by the partner. And that also ties to things like reconciliation and other accounting systems that have to be custom built. So there's a lot. And that's just a few examples, but there's a lot happening behind the hood that is super important to get right in order to do what seems like a very easy thing on the front end of delivering funds to customers in an emerging market.
How much of it is manual? I mean, are there teams that are manually reviewing information, or is it virtually approaching 100%?
Yeah, it depends on the
automated?
area, but obviously, our scale and size gives us the ability to automate more and more. Gives us the ability to have our risk systems have even higher precision. There's always going to be a small percentage of customers in the risk example that need to go through like a manual review process that are in part of a higher risk category, but you don't outright decline. You want to learn a little bit more. But increasingly with our scale and size, like we used to have to buy some off-the-shelf systems that would be applicable for all e-commerce merchants. We're a very specific, more complex scenario. And so as we've gotten more skilled, we've been able to build more of our own systems that have had higher things like precision and have given us, I think, a competitive advantage, both in terms of managing costs, but also in terms of just creating more peace of mind, which is our brand positioning with customers.
Yeah, interesting. I'm always curious to learn because it's so simple on the front end. Like, hey, just click this button, send this money. And I'm sure you have, you open up the machine and there's all sorts of nuts and bolts and levers going on. And it's probably a variety of combinations depending on the size, who's doing it, what countries, what time, what type of tender. Do you see? I mean, I think this is probably a good segue, but the impact of crypto has to be on your mind. I'd love to ask it in this way and get your take on it. Is when you think about the different directions you can go, I find one thing about the global remittances market is there's so many things you can focus on, whether it's B2B, whether it's consumers in this area, this geography, whether it's crypto stuff. How do you, when you sit down in the boardroom and you have your team, how do you split this up? Like, how do you, what's your analysis? How do you even parse through what's important and what tends to be a priority? I'd love to learn.
Let me talk about the latter,
and
then we can talk about crypto, which I'd love to do. But I think that, there's the insight in what you said is like international payments, such a huge space. Like, it's $1.5 trillion that's sent in P2P remittances. You start including B2B in various forms. You start including broader financial services. That's obviously separate, but there are just so many opportunities to add value to customers in this space. And our approach has been to take a very focused approach. And like that's true with remittances. And then as we're thinking about broader financial services, I think we need to take enough diversified bets because some will be successful, some will not. But I think we'll do that in a probably more focused way than a lot of companies, which I think will prove to be the right strategy in the long term.
When you do that, do you make a Google sheet of the countries by size, and then you stack rank them by how much money they're sending and how complex the regulatory climate is? Do you give them a score and say, okay, this is the one we're going after? Or is there some other method?
As I was talking about some of those, I was talking about broader financial services, but let's talk about remittances because I think that's equally important in terms of focus. It's almost like a game of Risk. Like you want to expand, but you want to expand very strategically and not spread your forces, too broadly. And so the team has a very systematic way of doing that now, and we kind of call it our like corridor expansion playbook. And there's a lot of methodology in terms of the inputs and in terms of what country we choose to do next, both on a send standpoint and a receive standpoint. And we're in 1,700 corridors, which means country A to country B. The early days it was much more rudimentary, like why we picked the Philippines versus India versus Mexico, and that's when I was more involved. And I think that was less systematic. I did have an Excel sheet like you're talking about. And we got lucky there's some luck involved too, right? I think it was good that I didn't just default to say, hey, we should start in Kenya. Although that wouldn't have been bad first market. I think it was good that we looked at the landscape and picked the Philippines as the first market. It was a great first market for us. But some of it's luck too. Like any entrepreneur that says none of it was luck along the way also, I think, is being dishonest.
Yeah, that's probably true. I do think there's a lot of people from the Philippines in the U.S. and a lot of people in the Philippines work for U.S. companies. There's a big infrastructure of remote work there, which might have been different in 2011. But tell me about crypto. So obviously, crypto is a massive thing by now. We're sort of past the early adopting curve. There's real serious people and money and companies that are emerging. Of the many potential benefits to humanity that crypto provides, remittances, cross-border in particular, feels like one of the really compelling concepts. I mean, I worked in a startup for the last couple of years where our primary user base was in Nigeria, and they are like the passion at which they love Bitcoin in particular, but crypto more broadly is like, I've never seen any society get so excited for it. Like they just love Bitcoin. And so what's your thoughts on this?
It's been interesting first and foremost to see how crypto's evolved the last 10 years. And, I from the very early days, I remember giving a talk with one of the Bitcoin core developers back in 2011. Coinbase does not exist. It was not easy to buy Bitcoin. But I remember learning about it at that point and contemplating with Bitcoin specifically, how would it evolve? Because it's not a matter of whether crypto will solve problems. It's about what customer problems it will solve. And I thought, and I wrote a paper early days around, is it better as a medium of exchange, a store of value, et cetera? And I predicted that Bitcoin would be more of a store of value than it would be a medium of exchange. Obviously, you can still use it as a medium of exchange, but the volatility and other things make it less ideal from that standpoint. So it has evolved to that, I think, broadly, with Bitcoin being a store of value. So now you look at the current innovations, and there's the question of like, what problems is it going to solve? And what are the areas that have some traction in terms of solving actual pain points? I think NFTs are a super interesting. These are all just my personal views. I think NFTs are a fascinating space. I think that just like Bitcoin, like who knows what the actual value will be now versus the future? Is there speculation? Is there not? That I don't know. But what I do know is that the idea of digital ownership and non-fungible tokens, like that is something that I think when you take a step back and think about it, on the one hand, it seems strange like being able to own a digital piece of art if you can just make a bunch of copies of it. But if you think about it in the physical world, yeah, you can own the actual piece of art and you can have, you can see a bunch of prints of it. And so I think that the idea of digital ownership is an area that I'm excited about, and I think we'll see, my personal view, we'll see some excitement there. I think that as it pertains to remittances is something I've obviously thought a ton about as well. And I think that where there's interest, where there's interesting developments is one, if there could be like a global digital currency. Like if there's a global digital currency to where the dollar didn't exist, the Mexican peso didn't exist, the Indian rupee didn't exist, etc. If there was one default global currency, then that would be an existential threat to remittances. The challenge there is I think the reason there is not a global currency is not a technology problem. I think it's a regulatory challenge. I think that most countries like sovereign control over their currency. And obviously in some countries where you've got hyperinflation, you've got other elements, you've seen more crypto adoption. But that's different than the whole globe adopting a singular cryptocurrency. And so that is one that I think about, but I don't think is likely because I think there are a lot of regulatory barriers to that. And I'm not sure we'd want that either. Like there are like stable coins that get rid of the volatility, that make it a better medium of exchange. Yeah. But I also think that the role of central banks, the role of like governments having some control over their own currency, I think that's something that will persist and has persisted for a long time. So then the question is, what cryptocurrencies will actually evolve on, not on the margin, but like as store of values and as mediums of exchange. And the way we view that is we're good at fiat to crypto, crypto to fiat, et cetera. So if somebody in El Salvador wants to receive Bitcoin as opposed to cash, great. That we can do that just like we disperse into a mobile wallet or disperse into whatever other currency they'd want to receive in El Salvador. And that is how I think it'll evolve. I think it'll be on a country by country basis. And I think that the on-ramping and off-ramping of funds, whether it's intra-country or whether it's fiat to crypto, I think is going to be something the world needs. And that's where we feel like we can really add value in the space over time, whether that's via direct-to-consumer like the El Salvador example, or whether that's via an example like with our Remitly for Developers business, where you might have a like global digital off-ramp is what we call it, where if folks have money in a crypto wallet in an emerging market, at some point they still need to get funds out of that, either into a bank account, cash, etc. And that's, I think, something that we can help via our Remitly for Developers platform. We're just leveraging the rails. So we stay close to it. I think we're appropriately paranoid. I think we're well positioned as crypto grows to be able to be part of the ecosystem, as we've proven to be. We're going to lean into that in a very customer-centric way. And by the way, some of the companies that we partner with will be successful, I imagine, and some will not. But we're a company that will lean in a customer-centric way to learn along some of the most innovative companies in crypto. And I think we have a variety of ways of partnering with those companies to learn along the way.
I like that. Does it make sense to go down the path of a Remitly coin as sort of a semi-centralized medium of exchange that people can use to, move money back and forth among, if they're constantly moving money back and forth, or does that really? I
like the Remitly coin on the Around the Coin podcast. It's hey. Well placed question. What I would come back to with questions like that is like, what is the customer value? What could that Remitly coin give the customer that is not already that does not already exist within a fiat currency or within another cryptocurrency. And so it's not something we've thought about seriously, but that I'd go back to the customer and say, what's the value that it would add for them? If there's a value, then we should consider it.
Yeah. It doesn't seem obvious to me why the decentralized aspect of it would be valuable to people. Because if you just had a currency internally, you could just keep it on your database and just say, this is how much, like a Venmo balance. That effectively solves the problem for people. But I don't see, I can't imagine. El Salvador is a great example of a country actually fully adopting Bitcoin. But when would the United States ever voluntarily, without a war, give up their power to print money and control the economy? I think it's culture and currency are the two major exports of the United States, and us giving up the currency of the world effectively just seems very unlikely. So I think my take on it is that I agree with you that there just can't be not that there can't be, but I think that it doesn't practically make sense to have one world cryptocurrency, because we wouldn't know what the cryptocurrency is worth. You have to, what's the US dollar worth? How do we know we're experiencing inflation? Well, it's how much it costs to purchase goods, but it's also relative to other currencies. You kind of see what the average is for the others, and you can see currencies rise and fall. And I just can't quite see how we would ever be on one currency. And also the fact that there is practical, technical, mathematical trade-offs between store of value and transaction speed and cost to transact and energy storage and all this stuff. So maybe someday, maybe it'll be a Mars coin. Maybe that'll be the first time there's like one currency on one planet.
Yeah, with all the SpaceX ventures. I agree. I think that I also... I think that's right. There are a couple areas too of crypto that I am that I question. I don't know the answer to. They're not related to remittances, but I think about a lot. So we could talk about those if it's helpful. But I think you're right.
Tell me.
I think that first off,
what do you think
I think that there's a big difference between the hype at times and the reality on the ground in terms of actual crypto usage. Like you mentioned Nigeria. I think that Nigeria has currency controls at times. There could be more of a demand in Nigeria. I'm not familiar. You're more familiar there. Argentina has, hyperinflation, holding an Argentinian peso versus Bitcoin in terms of just stability or a stable coin over time. El Salvador, I think, has definitely marketed that it's a national currency, but I'm not sure how many pain points it's actually solving locally. And so that's one thing that I think is just really important to look at the data. But the second thing that I don't know, but that causes me a little bit of concern in the crypto space is some of the cryptocurrencies, and this could be due to my lack of understanding, but some of the cryptocurrencies that offer very high APIs that are much higher interest rates for holding that currency. And what I'm afraid is happening in some of those is there's an underlying investment that the company or the currency is making an underlying investment that is higher risk, that is producing that higher return in an up market or when things are going well. And I just get a little bit concerned that folks that are investing in those cryptocurrencies with a high API do not understand the risks inherent with the underlying assets that are being invested in to produce those risks, often other crypto assets. And so I don't think there's anything wrong with like folks when they buy Bitcoin, they kind of know. They can look at the price, they can see how it's been volatile. What I get concerned about is when consumers are promised it'll be X% AP, your interest rate, and not knowing what the risk is to that actual return to the underlying asset. So that's an area I've paused on a couple times. Again, not related to remittances, but I think it's one that at least I want to more fully understand. I don't know if you do, Mike. I'd love to hear your perspective if you've looked into it.
Yeah, I've dove fairly deep and had a couple people on the show actually talking about decentralized finance, DeFi, and then sort of CeFi is another terminology that gets thrown around. So this would be companies like Nexo.io, Celsius is a big one. These companies they're not exchanges, so you can't move money between fiat and crypto in them. That would be like a Kraken or a Coinbase. But once you're in crypto, you can move it into these platforms, and you can hold stablecoin. They're effectively they're acting as the lending arms analogous to banks. So you put in stablecoin, USDC or Tether into Nexo, and it's using that capital to allow people to reinvest. And they're a bit vague, but I did dive into this. And one of the things they do with the assets is they provide liquidity to exchanges. So if you go to Coinbase and you want 100,000 of USDC, part of that comes from this liquidity exchange. So particularly for higher trades, they provide liquidity, and there's a price for that. So people would pay a transaction fee on Coinbase or Kraken or Bittrex or somewhere in exchange for that access to that specific currency. Because there's so many different currencies that there's not necessarily always trades open for that amount, because you'd have to match, with every buy and sell order, there has to be available liquidity. So the exchanges bottleneck are often that liquidity. So that makes sense to me. The return cycle. So if you put in, I think right now it's around 9%, 9.5%, 10% on USDC. So stablecoin, virtually the same for Tether or DAI or some of the other stablecoins. And then I think Bitcoin is around, Bitcoin, Ethereum, Solana, some of these, they're around, I think 6%. So pretty high, to earn 10%, nearly 10% on the dollar effectively, even though it's in stablecoin. Compare that to your checking account or savings account of 1% or approaching zero. It's drastic. And so then then you naturally say, well, to your point, what is the risk inherent to this? What am I giving up in exchange for that 10%? And I think I view it as two things. One is it's not, you don't want to just compare the risk to checking account in which the checking account is zero. There's some risk in a checking account, but to assume that is an appropriately calibrated risk reward investment, I think that's not true. I think you're getting far less in a checking account than you are for the reward. It's very stable, and that's great. You're not going to lose it in a checking account, but you're getting incredibly low returns on that compared to, if you put it in the market, if you put it in private investments or elsewhere. So I think part of when we look at like Celsius and Nexo and say, oh, these are really high returns on stablecoin, we're comparing that to the interest rates in a checking account, which are super, super low. So I think there's some of that as well. Inflation probably plays a role, in what future dollars would look like. But I think that the macro trend is that people want access to crypto, and they're willing to pay a lot to make
for sure.
Speculative investments.
And I'm glad you've dug into it. Maybe it is the liquidity management in terms of how they're producing that return. I think that it's just the understanding of that and what's driving the returns and what if any risk exists that I've wanted to dig into more. So I'm glad you are. And to the extent you have other companies in the space, I'll be listening to hear the questions you ask.
Yeah, and these guys are a bit more. They're a bit more vague to know what's going on because some human is programming the funds and programming what they're doing with the cash, just like a bank would, decide where to make investments. But I think the more straightforward and transparent by far is the completely DeFi protocols that are out there. So and again, there's always a price to it. But if you wanted to borrow money in the form of crypto on a DeFi platform, you put in, the equivalent of $100 and you could take it out. You could take out less than that. So the collateral, there always has to be collateral. Whereas a bank, if I take a mortgage out in a bank, there's not collateral. They're making a bet that I'm going to have earning potential and be able to pay that off. So, which I think is the only way you can do it. I don't think there'll be this kind of parlays into like credit scores and how we view the risk ratio of an individual person, which I think is pretty prime for disruption. But currently, I don't see any projects that are effectively assessing somebody's ability to return on a loan.
There's certainly a lot of opportunity to improve underwriting for sure.
Do you interact with those companies, the Experian, TransUnion?
Not a ton, especially from a lending standpoint. But I do think that, I mean, when you think about our customer base and you think about customers that move to a new country, and they may have very high creditworthiness. Like, could be a customer that works at Amazon that sends money back to India, but they don't have the credit history in the U.S. I think there's opportunities there. Like I said, there's a mismatch there in terms of their creditworthiness and the amount of credit they can actually get. And then likewise, there's whole sets of customers that are just starting to enter the formal financial system on a global basis. And I think there's immigrants are because of the fragmentation of financial services by geography and by country, and how that trickles down to creditworthiness assessment. I think that our customers are underserved in that space. So I'm happy to see crypto trying to improve that. I think it's a problem that needs to be solved.
Yeah, I agree. Do you see, one of the things I was thinking about prior to our call was the insight you would have if you can see, you don't have to have even close to all the remittances volume, but I'd imagine you guys are fairly representative of what, as a percentage, the world is doing. So you're sort of, if I'm looking at the entire world, you're seeing all these connections being done, and there's certain pipelines, U.S. to Mexico, U.S. to Philippines, whatever. But there's certain major pipelines, and then there's trends of those pipelines over time. And presumably that's due to migration patterns of people. They're moving to certain places. It's due to the economies growing in certain areas like Nigeria, whatever other developing countries. I think of like Southeast Asia, certain cities in Southeast Asia. Do you have a team, or do you look at these and try to draw an understanding of what's going on in the world? And I'm particularly interested / concerned about the U.S. and this sort of stagflation situation that we're in, where it's economic stagnation combined with inflation. Yeah, I'm curious what your take is on the U.S.'s in particular economic state, if you tend to lean bearish.
I think
or
on the
bullish,
U.S.
or
context,
how you make sense
I
of
don't
that.
have any magic answers there because I'm not an economist. But I could pontificate, but I'm not sure I'd add a ton of value there. I think that I think we do have a sense of like remittance flows, but we're a small percentage of the overall market. So there are some organizations like the World Bank has a whole division focus on remittance, both pricing and remittance flows. It's perfect. It's imperfect data, but it's probably the most widely regarded out there. Yeah. And because we're a relatively small percentage of the market, we don't and because digital is growing faster and offsetting some of like the cash to cash remittance use case, I don't know if we have a bunch of macro trends that we could draw, but it's certainly interesting. Like from a macroeconomic perspective, it's an interesting time right now for sure.
Yeah. It does represent, I mean, the flow of money represents, it's just energy, right? And it's where people are deciding to live. And I don't know if it's an ideal world, but in a world where people could live where they want to live, then effectively we have a more competitive regulatory situation, right? Like if the U.S. has certain rules that you're not in favor of, you could just move down to Costa Rica or Mexico or somewhere, and vice versa. Obviously not quite the case as it is like domestically within the U.S., but even just seeing migration patterns of friends of mine that have moved in the last couple of years due to COVID or career changes or just personal interest in living in different places. It's like, yeah, that's one of the things I deeply come to appreciate in the U.S. is the competitiveness of the regulatory and policymakers in different states, and how you just vote with your, you vote with your feet, move to a different place. When you went through your IPO recently, last year, I believe it was, how did you go about it? How did you prepare? You just say, okay, we're approaching the size of an IPO. We want additional cash beyond what private funds are capable of writing us. let's go IPO. Do you go to Goldman Sachs and say, hey guys, this is what we want to do, and they set it up and they do the work, and you go around and do your pitch to different banks? Have you considered alternative options? I know some tech companies in particular have gone direct listings or through a SPAC, or what's the
I think it was
climate like today
probably
for
different
companies
last
IPOing?
year than it has been year to date, just in terms of market performance. But in terms of the process for us, it's an interesting and very important and celebratory stop along a much longer journey of where we're headed. And I think that our vision is really all around really improving the lives of immigrants and their families by providing the most trusted financial services on the planet. And not all companies go public, but if you look at some of the largest iconic companies, I think that is where a lot of companies, especially venture-backed companies, especially end up as a checkpoint, celebration point. Like, it was the first time I had seen 75 of our most senior and tenured leaders since the pandemic started, and it was this window in between like the main call it part of the pandemic and Delta, where we were able to actually see everybody. And I think it recharged us, though, for a much longer journey. But it was definitely an exciting point as well, and one that we also tried to like incorporate our customers into. Like, some of our longest tenured customers as well were on stage with us. We had a founder dinner with my family, with my two co-founders' family, and then some of our earliest customers right after the IPO in New York. And so it kind of rooted us where we're at, and also in terms of what's to come. And we did the traditional IPO. We did want to raise some capital to be able to invest in our future growth, which is more difficult to do via direct listing. And I think there have been mixed results with SPACs. So the traditional IPO was our preferred path, and one that we were able to do successfully, and we're super excited about.
What's the downside of a direct listing?
Listings, you can't raise
not
capital.
as high visibility,
so
or initially
directly listing existing like ownership. Or in an IPO, you're actually selling shares to raise some capital to be able to invest in future growth of the business. And we wanted to be able to build out a strong balance sheet to invest in the long term, which is what we did.
And do you feel like, in hindsight, the process is efficient? Or do you feel like banks are taking an exorbitant amount of resources from companies who work hard over 11 years?
In the space where SPACs, direct listings, IPOs, there isn't just one route, because I do think that creativity and innovation creates more accountability and better options. So I think it's improving, and I'm glad it is.
Yeah. I wonder where it goes, because it's an important milestone. It's celebratory for sure, but it's also very practical. It's like access to cash, access to like free market cash is largely constrained behind these proverbial gardens of NASDAQ and the Dow, and they only let in certain people, and you have to do this certain dance to get in, and you have to be a certain size. And it's like, well, if there were, just playing out the hypothetical, if there's a completely free market open stock exchange, anyone could list at say over $10 million valuation. There's some floor, but it's much lower. It's much less expensive to go into this exchange. Like, there's some people I talk to that are considering this or trying to work on this in crypto. And I ask you, just because I'm interested, if you feel like there's enough. I always feel that inefficiency is the fuel for innovation. So if it's a really inefficient process and it's really expensive, and you're like, hey, we spent 3%, 5% of company net worth, or however you measure that, then it's like, well, it's probably not going to be that way for very long. Relic of the past traditional systems. But it sounds like from you, it was.
And I think whenever there's inefficiency, I think there's opportunity for innovation for sure. And the question that often I think exists is like, what is inefficient versus what is like a tangible value add, and how do you get that tangible value add or necessity while cutting out the inefficiencies? But yeah, it's good to see innovation in the space specifically.
Mm, mm, yeah. Cool. Tell me about so you have Passbook.
Yep.
So passbook.app, I was checking it out. So it's a different website entirely.
Yep.
It's obviously branded with Remitly, and it's clearly associated with you guys, but different site entirely. So domain authority is going to be unrelated. Presumably there's like a designated team that you have working on this. Why spin out this product?
I think it goes back to our vision around broad financial services.
What are you trying to accomplish here?
I think that there's when you look at what it's like as an immigrant to be able to get a bank account, not having an SSN, not having it designed for specific immigrant needs, both in terms of sign up and the products that they need, I think there's a big opportunity there. And so, yes,
do you
just started.
Not to cut you off, but do you mean particularly for immigrants into the U.S.?
U.S. to the Philippines.
Yeah.
We started just in the U.S. with Passbook, and I think that Passbook's indicative of a broader range of financial services that's part of a vision of where we want to head and what we want to accomplish. And I think having kind of a direct deposit account is foundational as part of the broader vision of financial services, because a lot of other financial services potentially need to plug into that, et cetera. So, I think we've talked more about Passbook, but we're excited about the wide range of financial services that we can offer our customers over time.
Mm.
Nothing
Anything
today,
else in particular that you're excited about as opposed to
vision,
generic blanket?
So nothing today, but excited about the vision of what's.
Yeah. Oh, I'm on the edge of my seat. I'm curious too.
Yeah.
I always like asking folks who are running larger companies about culture and about thinking, because it's so important, but also so nebulous and difficult to define. So how people feel in relation to the company and in relation to other people. Do you create, presumably you have a mission statement, vision that's repeatedly and clearly articulated to people in the company. Are there things that are unique that you're deploying? Are there a strategy you think that not a lot of other companies are doing to create a healthy, positive, and consistent culture?
I could talk about culture for a long
time around the company.
And I think that culture is, like you said, every company has a different way of getting it. It's my definition is how people interact, how people get things done. Every company is different. Most companies, I would argue, are not that intentional about culture. It just kind of evolves a little less intentionally. For us, we have. For me, it's first about saying what is culture. It's not like snacks in the kitchen. It's like how people interact and how people get things done. Second is defining those cultural values. And so we have a list of cultural values. It's a longer list. It's not meant to be memorized. You never be quizzed on it. But if the definition of culture is how people interact, then I don't believe personally you can put like 5 words up on a wall and like capture the complexity of human interaction. So some of our cultural values are things like customer centricity. That's always been number one. Lead authentically, bias for action, sweat the details. I could keep going, data-driven, be an owner. I could keep going through them. But they're meant to describe how people interact so that they can be then embedded, once they're defined, into the interview process, into the performance review process, and then the magic kind of happens in everything that's in between those two things. I think they should be evolving. They shouldn't be static. I think meaning that we refresh them on a regular basis. More dramatic refreshes early days than now, but we still refresh them on a regular cadence. I think that they should be measured. I think that they should not be a North Star of like chest thumping. We're awesome at all of these things. I, as CEO, we as a company, each team, each individual should recognize where their strengths and weaknesses are so they have that North Star of where they want to head. And I think in terms of construct, not content, Amazon's a pretty good example of how they've instilled their leadership principles, longer list across the whole company over a longer period of time. And that's not in content. You'd see some different values than Amazon and ours, like joyful, be an empathetic partner, things like that. But I think in content, in construct, Amazon's done a great job of scaling like a more consistent culture across the globe. And so, or for a longer period of time, at least they've done that. And so I could keep going, but those are some of my thoughts on culture. I guess the last thing I'd say, there's no silver bullet. I think all those things I just said are important, but 2 or 3 months into starting the business, 3 co-founders went and like whiteboarded what we wanted our cultural values to be. Because like when we were about to like bring on the 4th person on our team, if we didn't have values, at least like they weren't that good at the time, but we tried. And we spent half a day. We didn't boil the ocean. We whiteboarded how we wanted to interact and how we wanted to get things done. And then we were able to apply it to new people we were bringing into the company. And now I think about like that fourth person we hired, that was 25% of the company. That person was like I think about a hiring decision right now where I'm like 25% of the company. It stresses me out just thinking about it. And so I think getting culture, an attempt, not striving for perfection, but using some of those principles, and then in the first few months of the business, trying to define the values and integrate them into the interview process is super important.
I love it. It sounds like you do think about this a lot. Obviously, it's one of the few real levers you can pull to make an impact in the company, and it feels like a thing that you can't. It's not like a policy you change and people change. It's like stacking bricks on a house. Like you can start to lean this way or lean this way, but it's sort of an accumulation of how people are acting over a long period of time. Because people, I mean, you can set clear milestones, you can set clear objectives and write them all down. It's also a huge emphasis on how do you finding the right people, being a magnet for the type of people you bring in.
For sure. Yep.
Easier said than done. Yeah. Yeah. Cool, man. Well, thanks for diving in. Last thing I want to ask you, I'm just very personally interested. How do you, what sources of information, of people, books, wisdom, are there things that come to mind of places that you've learned over the years?
Or two or three come to mind. One is The Hard Thing About Hard Things by Ben Horowitz. I'm sure other people have probably mentioned that book, but I do think it's it's a compilation of his blog posts, but it's so great to be able to open a chapter and be like, oh, this is exactly what I'm facing, and this is an example of some principles in terms of how to deal with it. So that's one. Second is less probably well-known, but there's a book called The Promise That Changes Everything, I think is what it's called. The author is Nancy Klein, and it's all about the promise to not interrupt and to very intentionally listen. And that's been pretty transformative in terms of how we run meetings at Remitly that I think are higher caliber and more inclusive. So that would probably be the second book that I would recommend. And then the third is, I think the author's name is Patrick Lencioni, and it's called The Advantage, but it's all about how to kind of create a high-performing team and some good dynamics. If there's anybody on the podcast thinking about like, how do I storm, form, and norm a really high-performing executive team, and what are some ideas on rituals and ways to do that? Storm, form, and norm. Maybe I just made that up.
Store, form, and norm. I like that.
That is not the first time I said it. Now I'm questioning if that's an actual
Is that
term.
the first? Tell me that's not the first time you said that. That sounded. I love it.
Thanks so much,
man.
Great
Thanks for hopping on today. This is a lot of fun. I learned a ton, and really appreciate your time.